Silver prices have an interesting history of ebbs and flows. In January 1980, they were around $36 for a troy ounce, but by May 1982, they had fallen to $5.4, down by about 85%. For a long period, until about 2004, they were quite range-bound. Then in April 2011, they touched an all-time high of $48. But by December 2015, they had collapsed to $14, a massive 71% drop. Currently, they are back at $36 levels where they were in 1980. In other words, if an investor bought silver in 1980 and slept for the next 45 years, nothing would have changed if he had just looked at the silver prices. This price behavior of silver makes it a very tricky asset to navigate. In the Indian market, silver recently breached the psychological mark of rupees 1 lakh for a kg. If we compare silver's recent returns with those of other asset classes, silver has done reasonably well. Obviously, this run-up in silver lately has attracted investors' attention. But is it the right time to invest in silver? If you already have silver in your portfolio, should you book profits, hold it, or buy more of it? Given the price history of silver, these questions must be dealt with very carefully. And we are going to do just that in today's video. Hello and welcome to ET Money's YouTube channel. In this video, we will analyze not one, not two, not three, but 7 drivers of silver and see where silver may be headed. This video belongs to our playlist on gold and silver. I have included its link in the description so that you can explore it after watching this video. So let's take a look at the first driver of silver prices. Like any commodity, silver's price movement depends on its supply and demand scenario. The data published by the Silver Institute in its World Silver Survey 2025 provides insights into silver supply and demand. Silver supply originates from mine production and recycling. Its demand comes from industrial applications, photography, jewelry, silverware, coins, and bars. Industrial applications include electrical and electronic equipment, which further includes photovoltaics or solar cells, alloys, and solders. Until 2020, total supply was enough to absorb the demand. But since 2021, demand has outpaced supply. Even the 2025 forecast is one of deficit. Against the total estimated supply of 1,031 million ounces, the demand stands at 1,148 million ounces, a gap of 118 million ounces. Industrial applications are the largest contributor to silver's demand, constituting 59% of the total demand forecast in 2025. Within industrial applications, photovoltaics or their use in solar cells deserves special mention. Between 2021 and 2025, the demand from this subsegment more than doubled from 89 million ounces to 196 million ounces. This is understandable as renewable energy assumes greater importance in the overall energy mix today. However, it's also noteworthy that while silver supply has expanded by 2% year-on-year in 2024, and is forecast to expand by another 2% in 2025, silver demand contracted by 3% YOY in 2024 and is further expected to fall by 1% in 2025. Net investment in silver exchange traded products or ETPs remained robust in 2024 and is expected to grow by 14% to 70 million ounces in 2025. On an aggregate basis, the supply-demand picture appears to be in favor of rising silver prices further. However, if the aggregate demand continues to contract, the picture may change in the next year or two. Let's now take a look at the next driver of silver prices, economic activity. As we saw, the majority of silver demand originates from industrial and manufacturing applications. Industry and manufacturing typically benefit from economic growth. So silver prices are directly impacted by economic growth. If we take a look at the world's aggregate GDP growth, it stood at 3.2% in 2024 as per World Bank data. That was higher than 2.8% a year ago. This rise in growth was positive for silver and may have likely contributed to its rise. But the forecast for 2025 GDP growth is not so bright. The World Bank has slashed the 2025 GDP growth forecast to just 2.7%. The UN's Department of Economic and Social Affairs has projected the growth to fall to just 2.4% in 2025 owing to the trade war. That's a fall of 0.5 percentage points from the growth estimate of 2.9% for 2024. The IMF's revised World Economic Outlook of April 2025 forecasts growth of 2.8% against the estimate of 3.3% for 2024. Overall, a drop in economic growth is expected in 2025, and that's not good news for silver. Let's now take a look at the third driver, interest rates. Silver prices have an inverse relationship with interest rates. That's because if interest rates are high, investors tend to move money to bonds and fixed income investments, which depresses silver prices. Similarly, when interest rates are low or have been falling, it becomes more appealing to take risks and hence bet on other asset classes such as silver. If we examine the US Federal Reserve's interest rate trajectory, we see that it is currently in the 4.25% to 4.5% range. That's lower than the 5.5% during July 2023 to August 2024, but way higher than 0.25% during much of 2021. Now, if we take a look at the US inflation rate, that's trended downwards and currently stands around 2.3%. That's near the Fed's target range of 2% and should thus help ease interest rates further. The Eurozone's interest rate has also moved from 4.5% in 2024 to 2.15% now. China's interest rates are also trended downwards. However, it has yet to be seen how the tariff tussle between the US and world economies pans out. It has the potential to be both inflationary and deflationary. Inflationary because higher tariffs can be passed on to consumers and thus result in a price rise. Deflationary because they can inhibit trade, thus impacting growth. Whatever happens, we will know only with time. For now, it appears that fall in interest rates is going to fuel the silver rally further. And this brings us to the next driver, the strength of the US dollar. Silver prices are denominated in US dollars in the international markets. So if the US dollar strengthens, the price of silver goes up. This makes silver expensive and hence may reduce its demand. A reduction in demand can result in a fall in silver prices. Similarly, when the US dollar weakens, that reduces the price of silver in international markets too, vis-a-vis other currencies. As such, it becomes cheaper to buy silver, which can boost its demand. In short, silver prices have an inverse relationship with the US dollar. Now let's take a look at the dollar index and where it stands at a moment. The dollar index tracks the movement of the US dollar versus a basket of currencies. For the last 5 years, the dollar index has reached its highest point of 113 and its lowest point of 89. Currently, it's at 99. In January this year, it was at 109 and has corrected by 9%. That has possibly aided silver's demand. Since November 2022, the dollar index has moved in a range and there have been smaller peaks and troughs. Overall, there isn't much to be derived from the movement of the dollar index regarding the trajectory of silver prices. For our purposes, let's consider it to be neutral. However, if the dollar index makes a sharp move owing to the trade tussle between the US and world economies, that will need to be watched. Let's now move to the next driver of silver prices, and that's geopolitical factors. But before that, do subscribe to this channel if you aren't already a subscriber. Please do not forget to press the bell icon so that you never miss a video from us. Gold and silver have been storehouses of value since time immemorial. Like gold, silver gains amid geopolitical turmoil and as trust in the global economic system recedes. In the current scenario, there are quite a few hotspots. These include the ongoing wars between Israel and Hamas and between Russia and Ukraine. Recently, India and Pakistan also entered into a brief war. India has taken a tough stance against terror, and the Indian Prime Minister has said that the Operation Sindoor isn't over yet. As per latest media reports, even Pakistan has upped its defense budget by 20%. European countries are overhauling their defense spending as the US withdraws its security guarantees. On the economic front, the trade war unleashed by the US president has the potential of disrupting established supply chains and trade relations. All these will benefit the precious metal duo of gold and silver. The Russian central bank has been reported to have been considering precious metals other than gold to boost its reserves. This naturally includes silver. So as far as geopolitical factors are concerned, they are conducive to silver's further rise. Let's now dig into the last two factors, gold to silver and copper to silver ratios. The gold to silver and copper to silver ratios are a kind of trading indicator of the potential movement of silver prices. The gold to silver ratio is derived by dividing the price of gold by the price of silver, and the copper to silver ratio is derived by dividing the price of copper by the price of silver. The logic behind tracking these two ratios is that gold and copper prices are directly correlated with silver prices. Based on the average monthly price data between 1970 and 2022, the correlation between gold and silver stood at a remarkable 0.9. The correlation between copper and silver prices also stands at 0.9 based on the data between 1990 and 2023. But what explains this high correlation? Like gold, silver is a precious metal and is a storehouse of value. That makes its price movement akin to the price movement of gold. Like copper, silver is an industrial metal too. So when industrial demand for copper rises, silver follows suit. In fact, a majority of the silver mining supply is derived as a byproduct of copper mining. Silver is also derived from the mining of other base metals like lead and zinc. The high correlation between gold and silver prices and copper and silver prices leads to the tracking of the gold to silver and copper to silver ratios. Practically, whenever the prices of silver will deviate from the prices of gold and copper in either direction, they should get back to their long-term averages. Let's check the historical gold to silver ratio and where we stand as of now. As of now, the gold to silver ratio stands at 90.38. It made a high of 115 times in April 2020 and a low of 65.41 in February 2021. The median over the last 10 years stands at 81.15. So we go by this metric, silver appears to be undervalued by 11.4%. Yes, undervalued and not overvalued, because in this ratio, silver prices are in the denominator. So for silver to be relatively undervalued, the current ratio should be above the median. What about the copper to silver ratio? It has a 10-year median of about 0.15. Currently, this ratio stands at 0.13, which is below the median by 13%. This suggests that silver is currently expensive by this metric. So in terms of the gold to silver ratio, silver is undervalued, but in the copper to silver ratio, it's overvalued. Let's now put together all our observations and arrive at the final picture in the concluding section of this video. In this video, we explored 7 drivers of silver prices. Of these 7 factors, 4 are favorable to the further upward movement of silver. That seems to suggest that the silver rally does have legs. However, do note that we are not asking you to invest in silver. It's not a recommendation. Our objective was to provide you with the analysis so that you can make an informed decision. So do your own research as well. Do let us know in the comment section what you think about silver and its future course. If you do decide to invest in silver, silver funds of funds or FOFs can be a convenient option for doing so, and you can easily invest in them through the ET Money app. And that's all I had for you today. Hope you found this analysis interesting. Do share it with your friends and family, and I'll be back soon with another analysis. Until then.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.